valuable because it allows all of us to do bigger deals together and spread out the risk a little bit more. So
The Abundant Wallet.
So you gave us a background, kind of more around your story. Like, how did you like originally like get into real estate investing? Like you mentioned, you've been to CPA. Like, where did that transition? How did that come about?
yeah, it's a good question. And for me, it's actually one led to the other, to be honest. So I've been in real estate about 24 years now. Nice. And the reason I am is because of my CPA job. It was my first job out of college. I was working at Arthur Andersen, which used to be one of the big 4 or big 5 accounting firms. Yeah. And the person who was just randomly assigned as my mentor, when we got together, we didn't talk about accounting. We talked about real estate because he was big, and he still is, but he was big into residential real estate. So he had a bunch of rental property. I think he had like close to 100 at that point. So he was the first person that told me that you could even own a house that you don't live in. Like, it sounds funny, but at that point, as a just out of college kid, I guess, young adult, I really didn't even realize that you could do that kind of thing. So that definitely expanded my mind, and that made me want to, pursue rental properties as a good side hustle. So that became another great, not quite full-time job, but in a lot of ways it is definitely another job. But I figured out that I enjoyed it. I liked being a landlord, and started out in student rentals. The university that I attended here in Indianapolis, Butler University, had some student rentals around the university, and then started expanding, at some point from there to some larger properties, a couple smaller apartment buildings, an office building. And then at some point, roughly 2016, at some point, someone told me that you could also invest in other people's deals in the syndication world, to be a limited partner investor in someone else's larger scale investment opportunity. So that was another bit of kind of mind expansion before I realized that you could even do that kind of thing. So did that for quite a few years. And then at some point realized I'd want to be on the other side of that as well, on the general partnership side, putting the deals together and inviting, the investors to come along with us to invest along with us.
Yeah, that's fantastic. Wow. That's quite a journey. Yeah. I feel like, I feel like I'm a late starter, but I think you were able to build those relationships early, especially in college. And that's
just out of college. But yeah, you're right. I didn't realize it at the time. I just this sounds like something fun to do.
Yeah, that's awesome. As far as your current strategy, what is your personal current investment strategy look like today? Are you more of an equity play or cash flow or both? Or?
That's a good question. I think that's an important distinction too. But for us, our team, the Grovia Capital, we've said at the moment, our buy box is we don't want to buy something that's not going to be cash flowing, because if we have to count on appreciation, that in our mind, that's a little bit more risky than we'd like to be, especially from an existing property. Now, development's a little bit different. Everyone knows there's risks with that, but you go into it knowing that it's going to be potentially a 3 to 5 year play before you get any money out of it, because it doesn't exist and then it has to start existing. But what we're looking at is existing properties, generally 100 units and up, in a few different markets there in Texas primarily so far. But if it doesn't cash flow year one, preferably day one, we're a little bit more hesitant, just because we feel like that's what's going to protect our investors a little bit and give them a little bit of that, that downside protection of, even if, interest rates can do what they do, the market can do what it does, but as long as we're cash flowing, then we're safe. It's a safer investment. So that's appreciation is absolutely what gets us our value and creates that, that return for our investors in the long run. But we want to be cash flowing as well from at least year one.
Yeah, for sure. That's cool. No, that's definitely great for everyone all around. How do you typically think about deploying capital across different deals on the personal side? Or maybe that kind of bleeds into what Grovia does as well. But
yeah, right now my personal mission or personal financial plan, I guess, is primarily revolving around what we're doing as the Grovia team. Our goal is to find 2 solid deals per calendar year, to that we can invest our own money in. We always put our own money in, and then obviously to bring to our investors as well. But for me, it's real estate is a huge percentage of my my family's net worth, and it's a huge part of what I do on a daily basis is real estate. So being able to complement each other and provide the value there, that's pretty much my goal, is to find the deals through Grovia, and then to be able to invest in those as well, the larger multifamily properties that will have a 3 to 5 year, 3 to 7 year hold period. So preferably with that cash flow that we talked about on a quarterly basis.
Okay, quarterly. Yeah.
Our aim is always to make quarterly distributions to our investors, generally following the calendar quarter.
Yeah. No, that's what I've seen as well. That's cool. Where do you feel like capital is either like limiting you or slowing you down right now?
Everybody needs money, right? We all want to do deals, but definitely some of the potential opportunities we talk about, there's always a little bit of a discussion over, can we do this one? Is it too big for us based on the capital that we can provide between ourselves and our known investor group? So obviously having access to more capital is 100% is very valuable, because it allows all of us to do bigger deals together and spread out the risk a little bit more. So yeah, as a team, that's part of our goal, is to, kind of grow that net of those who are aware of us, and those who, we can earn the trust of potential investors that want to come along with us for the journey and the opportunities that we can bring to them. But yeah, did that answer your question?
Yeah, that sure did. That's great.
I mean, like I said, everyone needs money, and without it, you can have the best deal, or, the best deal in the world can be in front of you. But if you don't have the money to do it, the seller's obviously not going to want to put their trust in you to close. Because I think always, but especially right now, it seems like sellers are interested in, they'll even accept a little bit lower offer in terms of dollars if they have the higher comfort that, the potential buyer can get to closing and I can actually close the deal. So especially right now, because a good number of sellers are kind of up against the time clock from adjustable loans that they may have taken out 5 years ago, potentially when rates were lower. And now they're coming up against the clock of their loan's going to mature, and they're going to be looking at 1 or 2 or 3 percentage points higher interest. And that doesn't help anybody, still work the business plan. But work then isn't going to work now, unfortunately.
Yeah, no, I've seen the evolution of that interest over time. Have you ever looked at ways to kind of recycle or reuse the capital more efficiently between deals? There's certain financial vehicles that will allow you to do that. I don't know. Have you done anything like that?
So I guess it depends on what you're talking about. The two of our most recent deals, we have done a 1031 exchange into, or at least a couple, or one of them we did two of us from the Grovia team did a 1031 exchange into. The most recent one, there's just one of us I did an exchange into. So that's one way to recycle capital, kind of at least to shield it a little bit from the tax man, I guess, from one deal to the next. And it's a great invention. I love I love 1031 exchange when they work. I've done a few, and I've had 2 or 3 that failed as well. But that's the risk. But besides that, when we sell a deal, the goal is always, or the hope is always, that we've treated our investors well, and they'd like to, take the capital from one deal and roll it into the next. But besides that, I guess I'd be interested in if you know of other ways to kind of recycle capital and to make that more efficient. So that's could be a learning opportunity.
Yeah, for sure. I've kind of done that with my portfolio, and I'm a financial strategist. We don't have to, time permitting, we don't have to get into that here, but I would love to kind of show you what I've done and what I can maybe either help you or help maybe some of your investors do to spread that capital out to where they're using it in a deal, but it's also still growing and putting money back in their pocket. So, yeah, let's see, here's a good one. And I'm almost to the end. So thanks for bearing with me. But where do you see, where do you see investors losing the most money without realizing it?
Without realizing it.
Like, do you think it's like
within real estate, or just the wider realm of investing?
Yeah, like within real estate, because like I know a lot of people talk about like you're making money on the buy, but like there's a lot of things that go into it. So like, and you guys have way more experience than I do, but I'm just trying to think, if for whatever reason you have a general contractor and he quotes you on something and then he has to go back, then it's kind of a negotiation of who's going to eat those costs and that kind of thing. So that's the first thing that might come to mind for me. But like maybe you've realized other things.
So we've had a couple learning opportunities within our as being operators and buying some of these multifamily deals. One thing I have learned is we bought two properties that were basically side by side in a historic district. They're very old buildings. One was 80 something, one was close to 100 years old, and they're beautiful because they're historic buildings. The architecture is great. They huge windows, a lot of natural light. One thing we didn't plan on though is because they're old, we did not fully anticipate the amount of kind of what you were alluding to, repairs and maintenance costs that would be involved with such an old building. Of when things break, they're not as cheap as they would be if it were, fairly new build stuff, just because construction was different back then and materials were different. So we have definitely had a learning opportunity there of that old of an asset. The property is no longer within our buy box. That was one way that we kind of watched that unfortunately bleed cash, that we should have anticipated better, but we did not. Another opportunity we had to learn what we don't want to do is we bought some condos that we had at least we were told we had, we thought we had the ownership or the majority owner. We had the majority ownership of the units, the number of units within the complex. We were told that gave us kind of ownership, if you will, or authority over the HOA, but that we did not. The HOA fought us every step of the way, and they were not, unfortunately, a good HOA. So while we can make our units inside as nice as anywhere else in the city, if the HOA was not doing its job and making the grounds look nice and the common areas look nice, then it was definitely working against us in that regard. So a prospective tenant doesn't want to walk through something that looks really ugly to get to something that looks nice. So that was one thing we learned. No more condos for us.
That's interesting because I feel like if you owned a majority of it, and I don't know the legal ramifications, but I'm thinking if you have the authority, can't you just dissolve the HOA? But it sounds like no.
They fought us at every opportunity, saying that we didn't have. Even though we owned the majority of the units, they said we didn't have majority vote on the HOA. Finally, it took a long time. We finally got somebody on the HOA board. But then, there's just one of, I forget how many members were on the board. So it was definitely more stressful and was not what we intended or planned on going in. Besides that, this environment in terms of how investors can lose money or can get in trouble, insurance costs are a huge driver of our expense budget. Taxes are a big factor. Insurance costs went up and up and up in the years past. Now they're starting to trend down a little bit as well, but they're still inflated. So if someone's buying with taking the broker's word for it of what this expense or that expense is going to be without independently verifying it, that can be a big way to go in kind of behind the eight ball already if you don't have a really good grasp on what these costs. There's some costs that are controllable, like to some extent repairs and maintenance, or what you're paying the property management company to manage the property itself. But insurance and taxes, those kind of are what they are. Sometimes, you can shop insurance around a little bit, but you can't, there's not a whole lot you can do to help minimize that expense besides see about changing carriers.
That's such a great point. I feel like taxes and insurance are more of a fixed cost. Obviously, you can go with a different carrier and kind of get it cheaper, but like stuff like property management, I think it speaks to due diligence where, they say, are you? Yeah, I'm sorry. I didn't know if you had to go, but yeah, I mean, it kind of speaks to due diligence where your property manager sends over a contract and you think it's like one thing, but until you get under the hood, then, they're like, I've had that experience too, to where like 10% on all projects that they have to manage and stuff like that. It's just like, no, like we'll get our own quotes. Like we don't.
Yeah, definitely. And that's an easy thing to miss as well. That part of the contract, 5 or 10% for them to manage it. It can have a huge impact.
Yeah, no, for sure. All right. Last question, and then I appreciate your time and staying with me here. Just out of curiosity, for future and expansion, like what's the biggest challenge you're facing right now when it comes to like capital or scaling?
I think two parts to that. Number one, there's a lot of properties for sale right now, but most of them aren't worth buying, aren't worth paying what the sellers think they're worth. So finding something that's worth what that we can buy for what we think it's worth, that's probably the biggest struggle that we have right now, because there's still a disconnect between buyers and sellers, of that value. And the brokers are there, as the middlemen. They work for the seller. So they're trying to paint as rosy of a picture as possible. So there's still deals out there, but they are much harder to find. So it just takes looking a lot harder and waiting sometimes longer than we'd like to wait in between good opportunities for our team. So that's definitely a big one. Our team underwrites dozens of deals a month. 2 or 3 of those, 3 or 4 of those might be worth talking about. And one of those might be worth putting an offer on, even though we may still be, 10 or 15% off of what the seller thinks their property is worth. So ultimately the market decides that, and there are some people out there to kind of tie into the second struggle of capital. There are some people out there or institutions who are buying and they either are trying to solve for a lower return for their investors than we are, meaning they can pay more because they don't need as high of a return on their invested capital. But because we work with investors, we have some minimums certainly that we're trying to hit to make it worthwhile for us and for our investors to invest our dollars there. So we may be trying to provide a higher return, meaning we can't pay as much in order to achieve that return. But others may have just access to cheaper capital than we do. And that's something we talk about quite a bit as well. Like how can we reduce the costs of our capital so that we can be more competitive on more deals to allow us to, kind of repeat the process more often. So access to cheap capital, to good capital, is always a struggle, I think, for almost everybody. Trying to buy real estate, whether it's someone just trying to buy the house across the street from where they live, or, a big 1 or 2 or 500 unit apartment building. We all need money to do it, and we've all got to make the numbers work in order to make it an attractive deal for us.
Yeah. No, that's great. Yeah. Thank you for all that. I would. So I'm a financial strategist, and I help people get into vehicles like dividend-paying whole life insurance, so cash value life insurance. I can definitely talk more about that, but I've used it for basically using the cash value to fund a lot of my real estate deals, and I've helped other clients and businesses do that as well. I'm not sure if you've heard of it, or if you have a firm grasp on, like, you like it or you don't like it, or never heard of it. But yeah,
I would say I'm probably somewhere. I have definitely heard of that strategy. I've not implemented it. Besides, we have a whole life policy for myself, but it's just we haven't tried to use it for the cash value. Yeah, but I have heard it. I think in the sense of like max funded universal life, or I could be mixing up terms, but you basically overload it as much as legally possible the first several years, and at some point you can draw on that cash, take it back out as a loan to yourself. Is that it? And then you can use that elsewhere.
Yep, that's exactly right. And that way you're recapturing the interest that you had otherwise paid on bigger purchases or lenders or banks or whatnot. But that goes right back in your pocket through dividends. But it's also known as infinite banking. So I'm an IBC.
I've heard that term.
Oh, so I'm an IBC practitioner. So I help people customize based on their needs and get into something that works for them and their goals. But we Nelson Nash is kind of like the founder of the whole thing. So he deliberately, just the way the IULs or Index Universal Life are structured, to not use that just because the premium can go up and down, but to use a whole life policy to where that's kind of fixed across the board. But yeah,
I can't say that I'm super familiar with it and how to use it effectively. At some point years ago, I looked into it a little bit, but I didn't get super far. I got distracted with doing something else.
Yeah, no worries. There's a very small percentage that understand it, and if they do, they understand a portion of it. But yeah, I was just kind of putting that out there, and definitely. If no obligation, but if you want to learn more, I'd love to maybe do a deeper dive and see how that might work for you personally, or for maybe some of your investors. But
Do you have any propaganda or like a flyer of any sort
Yeah.
that you could send that I could review?
Yeah. I'll see about getting like a 1 or 2 pager, and yeah, give you that. And yeah, and then we can kind of go from there. If you want more information or you want to learn more, maybe we can jump on a call and, see what questions you have, or even dive into the design of a policy just for arbitrary sake. So
Reasonable. Appreciate that.
Yeah. Well, yeah. Again, Scott, thanks for meeting with me today, and I appreciate all the feedback. This is definitely going to go really far once I start launching the podcast. You had great insights and amazing answers. So again, really appreciate it.
Appreciate you reaching out and just being interested to chat. I always enjoy chatting and having the opportunity to learn as well. So I'll take a look at what you send over and go from there. Feel free to stay in touch. It'd be great.
Yeah. Sounds good. Definitely looking forward to what Grovia, their newer deals as you guys get them. That's another thing too, is like, you have time, money, and experience. I feel like if you always have money, you're always going to get into some type of deal, right?
Yeah.
So that's kind of
hopefully a good one, right? But
exactly. Yeah. Another advantage of IBC there, but cool. Well, yeah, thanks so much. And hope you have a great weekend.
Thank you. You too. Good chatting.
Be in touch. Thanks.
Bye.